The month of November has seen equity markets behaving very volatile. What's in store for the months to come? Hi everyone, I'm Mubina Kapasi, and to discuss this, I have with me the Executive Vice President for Equities with Kotak Mutual Fund, Devender Singhal. Devender, thanks so much for joining us today.
Hi, Mubina. Thank you. Thank you for having me here.
We've seen the Nifty dip below 19,000 and then bounce back quite vociferously. What do you think are the factors contributing to this volatility?
See, typically October, November is the corporate result season. You have the second quarter numbers coming out for most of the companies, and in anticipation, market tends to be a bit volatile. So at the start of the quarter, people were expecting that the numbers may not be as good as what was coming out. So the market was a bit nervous, and we saw some bout of profit booking happening there. Post that, when the numbers started pouring in, it came out that the numbers are actually good in terms of the profitability, though there was some slackness in terms of corporate sales growth. But profitability, because of the commodity prices coming down, has been pretty robust all across. So this led to the pretty strong numbers on the second quarter. Now, that was on the corporate side. You also have a very good macro indicators coming in. You have the highest ever GST collection coming in. You saw the toll numbers basically on a very high note. And then all the commentaries which are coming out in terms of the outlook for the next half was also pretty robust. Coupled with that, we also saw the softness in the inflation numbers coming in. And this also resulted with people hoping that things should be better going forward. And hence, we saw the upward movement again back there in the market. So I think this could broadly be classified as few of the reasons which basically led to the higher volatility. And in the end, when we saw the markets moving up from these levels.
I think you've summed up quite a few factors that have seen equity markets move in November, or rather have contributed to the equity markets in November. The other one factor is FIIs. We've seen this relentless selling of sorts since October, but interestingly, it's eased a little bit in these last couple of weeks. Do you think that it's a big part of this has to do with the way US yields have moved?
See, it would be very immature for me to say that, this could be attributed as one reason for the buying or selling to happen. Yes, you are right that post October 2021, there was a bout of selling which happened. But post Feb March this year, you saw a very good strong buying from the FIs coming in, which started tapering down post August, and we saw some dip in September. I think a couple of reasons. One, the corporate profitability for the Indian market is now pretty good. On top of it, the expectations of the rate hikes there is getting a pause. So whenever the rate hikes pause, they take a stop. You see emerging markets at the beneficiary side. And India, I think we're the only economy which would be a $10 trillion market over the next 10 years. So there's no option for the FIs to come in. So yes, you do see some bit of buying happening when interest rates takes a breather. But I think that could only be one of the factors why FIs are being looking at India again.
Okay, November also saw a very exciting festive season. I think in general, there was a lot of positivity in consumer sentiment. What was your assessment and reading of consumer demand this time around?
We are pretty optimistic of this demand continuing. Uh, the consumer discretionary part of the growth has been really strong. You could see happening in automobiles, be it passenger vehicles, two-wheelers, and SUVs. You could also see it in happening on the durable side. So that leg of the growth is pretty strong. Jewelry numbers have been pretty decent. The one part of the growth which has been lagging has been on the rural side of it, which when you look at the numbers gone by, it doesn't look very encouraging. But when you look at the commentary which came from the companies, it looks like second half is likely to be very, very promising. Now, also, we are heading into the busy marriage season. Almost 4 lakh crores of worth of activity is going to happen around in the economy. And typically, this would also fuel the growth. So we do expect the consumer momentum to be continued strongly. Mobina, we have also seen that during general elections period, there's a lot of consumer spending and sentiment around the consumption is pretty strong. So we would be heading into the general elections sooner. So we do hope that this sentiments would be positive in the times to come.
All right. So, clearly you're very optimistic of how consumer demand and the sentiment in general will be all the way up until general elections. So what's your take on what the outlook is for the equity markets in the mid to long term?
See, as an equity investor, the only thing we ask our investors to be wary about is the volatility. And for volatility, time in the market is the friend. So the longer you are in the market, the lower the volatility is going to be. So when we ask our investors to put money into the market, we tell them that you look at a 3-year, 5-year, 7-year horizon. And luckily so, the mutual fund investors in the country are maturing enough and they're looking at periods beyond 5, 10 years also now when they're looking at investments therein. We are very, very positive in terms of the overall outlook for the Indian market over the next medium term, 3 to 5 years and beyond. We think that you would see a double-digit nominal GDP growth, and corporates tend to do slightly better than the nominal GDP growth. So if your earnings, even if the multiples remain same and your earnings compound by a double digit, I think we're in good stead. So I'm pretty hopeful.
Okay, so finally, just to wrap up our conversation, what is the strategy you'd advise equity investors to deploy right now?
See, first of all kudos to the Indian equity mutual fund investors. They have matured a lot. They're graduating very, very fast. SIP has become the way for them, and this is also a very disciplined way to invest into the future. As I said earlier, that India would be the only $10 trillion economy which would be there over the next 10 years. So there's no reason that you would not see the growth happening in the Indian market. I mean, it can have a delay of a couple of years, but we are going to touch the $10 trillion nominal GDP mark sooner than later. So, and market cap follows the GDP, right? It could be plus minus few times, but generally it follows the trend of the GDP growth. So in my mind, we have no hesitation in saying that Indian market has a long way ahead, and there's a lot of amount of money to be made in the market over the next 5-10 years therein. So continue with your disciplined investment, be patient, and reap the rewards of compounded growth.
All right, and finally, just to sum up our conversation, what categories would you recommend at this point of time from the entire equity mutual fund offering?
If I answer that question honestly, you'll say that I'm promoting my own schemes. Honestly, multi-caps and multi-assets, basically. These are the two categories which are very close to my heart. And I actually feel that these are the categories whereby a lot of alpha can be made by the investors over a period of time. When we talk about multi-caps, it's that a minimum of 25% each is there in small cap, mid cap, and large caps. The balance 25% is that the fund manager's discretion where he sees the opportunities therein. And the biggest differential which can be there for an investor could be in moving assets across debt and equity or commodities therein. That is where multi-assets comes into picture. So if you are looking at one fund for all the asset classes, it's got to be the multi-asset allocation funds, which can move your money from equities, debt, commodities, and even overseas equities. If it has to be only one fund which you're looking at equity, it has to be multi-cap.
Devender, it's been a pleasure. Thanks so much for joining us.
Thank you, Mamina. Thank you.
Well, the outlook seems to be very positive. India is a country that will hit the $10 trillion mark very soon in terms of nominal GDP, so it's hard to ignore us. Stay disciplined, of course, with your investments. That's the advice from Devender Singhal. This is us wrapping up the outlook for the month of December for equity. Stay tuned to Kotak Mutual Fund as we'll be back with more such interesting insights.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.